All right, hey folks. All right, we have gone through the initial day trading deluge. We caught one, just not a strong not a strong follow through day so far. We'll figure that out. It's going to be tight. Volumes are going to be low. Let's just take a look at SPY volume really quick here, just to allow yourselves. Okay, I know it's early, but SPY on a typical day trades 53.6 million. We've traded 6.3 million. Of course, that's going to fill in, but you have to argue that a lot of the volume is going to be done in the middle of the day. It's not like we're waiting on a whole lot of big news. But okay, so let's take a look here. First to the downside, Dominion. This is just kind of chopping around here. I wouldn't try to play that. If I were trying to play anything with that, if implied volatility was especially high and we had weeklies, which I do not remember if we have weeklies for something. Yeah, it tells me that we don't. I would not. You're going to have to wait probably a week and a half, 2 weeks before you start to see any decay here. But it definitely looks range bound between kind of like 70 and 72 half. That's the only, really the only thing that you have here. You can buy this and sell this, and sell this and buy this. Don't have earnings coming out, and you're collecting 90 cents a premium. And we're trading, basically right there. But it's been stuck here for quite a bit. But we are. Get the trading tool here so I can show you. And we only have to do one side of this, right? Because the call spread and the put spread cannot be against us at the same time. So essentially, what this is this is a. Let's just look at the call side of this, which is the 72 half. And if you guys don't understand what I'm talking about, let me know. We're going to sell this and we're going to buy this, and we are not going to pay premium. We are going to collect 90 cents a premium. So we're only laying 1.78 to 1. The problem is that we have 23 days to expiration. 23 days of expiration, probably 13 days of that where we're not going to see an appreciable decay. We can look at what the decay of this is right here. The decay here is 2 cents. And then, of course, as we go on in time, if we go to September 5th, well, now we're getting 3 cents. But you see, that's not that per day. We need to get to, like, probably here, where now we're taking in 6 cents a day. That's if we just stay right here. So, though the reward to risk is fine, but selling these iron condors, you have to be pretty darn sure or convinced. You're not going to be sure. You have to think quite strongly that we are absolutely range bound. Now this does look pretty darn good. This is 69.39, and it's not bad. If they had weeklies and we had something like this where we were even laying 2.5 to 1, even to next week, I would probably do it. Alright, so here we go here, and let's move on. So I like that. I just don't like how the options are setting up. So Dominion's off the board. Fiserv having a roll over here. What's happening? They're actually up 1%. The predicted high was 79.26, so we're right at the top of this thing here. This looks a lot like the Fastenal that we had, that we have on now. I don't think I'm going to double up on that. That's not this great. Okay, it's very hard to play this. It's looking weak. I mean, we've had had the neural index since the 21st in the red. We got the crossover today. It just, again, it looks, if anything, I would be looking at selling a call spread in this. Selling this call spread at like, I'd like to go out to next week and sell the, so even selling the 67.5, 68.5, you're only taking 20 cents. That means that you're laying 4 to 1. I'm not doing that. Avis is just sideways. It did have a bullish crossover. Again, looks range bound. It's probably going to have very low implied volatility. That's higher than I thought, actually. But again, we don't have weeklies here. So we're going to have to hold these things for a while. Need weeklies. Gilead. We love these setups where we have these kind of protracted. Let's see how it was sideways for a while. And then you got the definitive crossover here. Predicted this very well. Now we have the move to the upside. The crossover to the upside. Everything looking strong. It's up a little bit today. I might consider replacing one of our existing longs. Sorry, allergies. SWK. We're in this for 75 cents. Let's see if we can find something that works well with Gilead. And this SWK just isn't doing a whole heck of a lot. Let's take a look at that. Let's see what the chart looks like here. So we had the crossover, and I think we were even looking at it on a shorter term. We had this crossover. It's still looking strong. I'm not seeing anything negative about it. So which one? It's like a question of which one do you like better? Because Play and Guidewire, those are pre-earnings plays that we're going to hold for a bit. Walmart, I would get out of Walmart at 70, but it's actually down a little bit on the day. We're in for 42. It's trading 48. So I'm not convinced to get out of that yet. And our Fastenal was hanging out right where we were. It's basically unchanged on the day, and we're in at 50, paying 50, and you don't understand what makes weekly options different. There's less timed expiration. You have to, if we're a credit, the question was that what makes weekly options different. They're not different in any of their structure or anything like that. It's just a matter of timed expiration. If I'm going to do an iron condor, or at least consider doing an iron condor, I don't want to be out there for 3 weeks, 3+ weeks. Because why? Well, a lot can happen in 3+ weeks, and I'm not going to see much decay coming my way until we get to be around 7 trading sessions. 7 trading sessions into left. And so basically we'll be sitting here for 2 weeks collecting very little decay, but yet at risk for the entire time. So there's nothing different about them, just the amount of time that's left to expiration. That's all. It's a good question, though. Okay. Let's see what's going on here with Gilead, if there's even something to consider. Okay, up a little bit on the day. And okay, so Gilead is trading 75.21. If we want to go out to regular SEP, and the implied vol here for SEP is 19.9. So we are looking at targeting the 78.5 area, which is probably going to fall. Oh, no, they do actually have 78.5. So if we do a 77, 78.5, that's trading for 29 cents. seems minus, even if we paid 30 for it, that's 4 to 1. Let me check let's make sure our math is good. 75.21, close enough, 9.21. And that implied volatility is 20, that's fine. So we are targeting 78.5. So because we could even bring it into the 78s. And do a 76 half, 78. 76 half, 78. 78 is going to be where we max out, and that guy's going to be trading probably 35 cents, 38 cents. We're still getting almost 3 to 1 on that one. And that's only a buck and a quarter out of the money. I kind of like that. So I think what we'll do is let's put out an SWK. SWK. Let's put out. I'm going to consult our bio. I'm looking at this. The only thing that's bothering me a little bit here. You know, it is above the 200-day moving average. It's right at the 50-day moving average. If it gets above there, then it can certainly go. I'm going to talk to our bio expert, and we'll see how we want to do this. And I'm not so sure where we are, just calendar-wise and everything, that we want to continue to add long positions. I'm fine with what we have, but I don't want to continue to add. But I'm all for swapping them out. Okay, so I did record this.